Afternoon. I'm Eddie C., the author of Trend is Friend. The date today is 4th of November 2022. It's a Friday and the time now is 3:44 p.m. Welcome to Purchase Rationale. Purchase Rationale provides 15 reasons when considering a particular stock. A disclaimer first. Whatever sharing is done here is purely for information and educational only. Should you consider to buy a stock after my sharing, please first consult a financial planner or a broker. The stock in question today is hibiscus. Now, although if you look at the right side of my screen here, Uh, the best triggered stock today is not hibiscus, it is CYL. Uh, but because I have done CYL the last few days and also E-frame has come out, so I am picking hibiscus as the next best stock for consideration today. All right. And the stock code for hibiscus is 5199. It should be an interesting stock because this is the first time I'm doing oil and gas stock. Okay, let's move to the fundamental consideration. Okay, let's take a look at the overview. Now, if you look at the hibiscus fundamental, you can see that actually hibiscus since 2002 has been increasing its profit margin in 2020 where it was not doing so well, and then 2021 he has seen some increase, and actually hibiscus did very well in 2022. All right. And on the balance sheet, we can see that actually the debt to asset has also gone up, probably due to more capex for oil extraction and also for generating revenue. Uh, Although the debt to asset has gone up, I'm quite sure the capex spending has returned good handsome profit. And as you can see here, the operating cash flow is also showing good. It has been incremental since 2002, corresponding to the profit margin increment. Okay, and dividend wise, uh, hibiscus pays out a dividend payout ratio of 6.56%. All right, the rest goes into retained earning, which I believe they also inject into capex spending. All right. Okay, let's take a look into the intrinsic value. Let's go into statement and let's go into statistics. I change it to annual. Okay. All right. Let's calculate the intrinsic value now. Let me bring up my calculator. All right. To calculate the intrinsic value, we use the enterprise value over here, which is 1.99 billion divided by total common shares outstanding, which is 2.01 billion, and the intrinsic value of hibiscus is 99 cent. The current market selling price is 103. Okay, so we pay a small premium of 99 cent minus 1 ringgit and 3 cent. We pay a small premium of 4 cent differential, the intrinsic price relative to the market price. And in terms of percentage, is 4 cent divided by 103 cent. Okay, which is the market price. Hold on. 4 cent divided by 103. Okay, you pay a 3.8% premium. All right, for it. So the question now is whether paying this 4 cents, we say 4 cents, 4% differential, is it worth paying? Let's take a look at the uh, operating margin. Operating margin is, wow, with the good Brent oil price now, hibiscus is looking at operating margin of more than 50%, 50.64%. Okay. But more important than this 50.64 is actually, uh, I like to look at the operating earning yield. Operating earning yield of 32.45%. What it means is that it more than covers the 4% differential. All right. And on top of that, the PE ratio of hibiscus is 3.38, which is very low. And my favorite acquirers multiple, enterprise value over EBITDA is only 1.84. So you can see that actually you are buying quite a good value at that price, even for a premium. And hibiscus yields a dividend yield of 2%. It has free cash flow of 805 million, a net debt of 8.59 million, meaning that hibiscus is not a net cash company, but it has probably a lot of borrowing for capex, for the oil extraction. It has a bad debt of 6.12 million, and on performance delivery, Poitrovsky F score 6, which is good, the minimum requirement I require for any company, also indicating that actually hibiscus is actually on a recovery mode. All right. The Altman Z score is 1.38, which is a little bit worrisome, but that is because I think hibiscus uh, takes in a lot of borrowing or debt to cover its new extraction. Excuse me, the puppy is making some noise there. Okay, and by niche M score of minus 1.49, which is looks like the accounting for the last 2 years is not so straightforward. Okay, although fundamental wise it's not so pretty, but knowing that hibiscus is on recovery, so we will be a little bit more forgiving on hibiscus on the fundamental side. But let's take a look at the technical. All right, let me close this first. On the technical side, first we look for the trend. There are two higher lows here. So basically, hibiscus, we have been waiting for this moment for a trend to form. And based on today's candle, we have a confirmation of a trend forming, and there is a momentum as well because the price action of the candle is already above the Ichimoku cloud and also just break through the MA 233 line. Okay, So basically, the strategy for entry is what we call breaking off the resistance of the 233 line, or breakout of the 233 line, and this is probably the start of a trend upward. All right. On the reward to risk ratio, if we buy hibiscus now at 103 with a target price of 123 and a cut loss at 94 cents, it will yield a reward to risk ratio of 2.15 times. And we are happy to see that actually hibiscus is just riding on wave 3, and actually there is a spare to ride until wave 5, but let's talk about wave 3 for a start. All right. uh, and the, we can also see that hibiscus petroleum is having a bias intact situation where volume is actually building up. All right, so that is a good sign and signal for us. Although generally overall hibiscus still faces some risk in terms of the fundamental side, especially from the debt side, but in a oil and gas related industry, debt is always, because it's capital intensive to extract oil, so it is only reasonable to expect a lot of borrowing in order to take advantage of the good oil price now to extract more and spend on capex. Okay, let me have some commercial time now. One of my new subscriber told me that my video session is quite how do you say, is quite Greek to her, because there is a lot of technical jargon on the investment side. So I will do a little short commercial here. Well, in order to solve that problem, actually, you you should actually read my book, Trend is Trend, in order to understand all technical jargon. All right. So if you like what I shared today, please like, share, and subscribe. All right. And subscribe to my this video, and if you subscribe to my video, you get to join the TIFIC Investing Club for free. Thank you for listening today and to spend your time with me. Have a good day, and have a good consideration for hibiscus. If you think it is good, make a decision. Thank you, and